Wall Street just closed and the whole world starts a new day already. Wall Street was in trouble. Yes, the Nasdaq was up. Yes, Nvidia. I sold Nvidia just before lunchtime in New York, and that was a mistake. It just kept steadily moving higher, but still several hours of sideways towards the end of the day and a bit of a struggle. Nevertheless, every day Nvidia tends to open up on Wall Street with a gap to the upside. And that seems to be where most of the gains, fresh gains, are coming from, and you have to respect that. It's very difficult to manage risk because you never know when it's going to do the same thing to the downside. So every market has a correction. But for the moment, Nvidia is dragging the Nasdaq up. US 500 doesn't look so good. Had a fast drop, of course, on some comments from Fed officials saying that they should wait for several months of good inflation data. And I've got to tell you, that last inflation print, total market overreaction. It was down hardly a little blip, but it was still re-accelerating. Remember, the low a year ago for inflation was 3%. So it's still elevated from where it was. We've had a year of frustration of no new lows in inflation. And that's why the Fed wants to see this thing really hit on the head somehow. But that's not going to happen as geopolitical tensions continue to build in both the Middle East and around Ukraine. That makes it difficult for energy prices to decline. We're actually making a lot of money at the moment being short the Australian 200 index, Australian equities. They are in real trouble as Australia seems intent on moving towards a different diplomatic military posture, if you like, towards our biggest trading partner. And historically, that's never been good for any society. It's a very tricky game to play. I'm not playing sides in politics. I'm just saying if you're a global investor, you'd be scratching your head a little bit at the predicament Australia could be in over the next few years, particularly as China just surrounded Taiwan and really put the pressure on after the new president who just came to power there, came to office, really did go pro-independence for Taiwan, and China didn't like that at all. Okay, so that was a quick aside on Australian equities. The other thing we're making good money on is gold. I think that's going to work out. Yesterday I said sell the US dollar. That didn't work out. It worked out for a little while. I think you sell the Australian dollar with Australian equities, and the US dollar I'm really at sea about. And I was once a naval officer, so I use that expression with respect. But big money, where we're making our biggest money right now, is selling US Treasuries, 10-year bonds. I mean, it's really a one-way street now. It's not a difficult game to play, a difficult market to trade. It tends to be very liquid. And most, it's quite possible that most countries in the world are selling US Treasuries at the moment. Because sometimes if you're an American listening to this, sometimes the biggest challenge for Americans, and for any country really, but it's true of any country, but you also have been the world's largest economy and the world's major financial markets center, although London's been bigger in FX. But it's when you're in the forest, you can only see the trees, and you need to get out of that. And that's the great advantage here of studying all this from Sydney and not New York, is that's why I've called inflation and Fed monetary policy better than any American bank has, because I'm outside and I can see the global influences that play on the US as well. And that has been a tremendous funding of absolutely irresponsible fiscal largesse and spending. And the world's been funding that. And as the world now tends to take a more neutral diplomatic position on many issues, even the Ukraine war, the United States and also, look, the big change, okay, I'm going on a bit, but the big change for the rest of the world was when, is this process at the moment where the United States is trying to seize the assets of Russia, and Russia is now fighting back, seizing the assets of US corporations and banks within Russia, many billions of dollars. But But that has made everyone uncertain, particularly the Chinese uncertain, about holding massive amounts of US debt while that government is being fiscally irresponsible, and both sides of politics are. Um, why would you hold and fund a party in another country? Because that's what the US is doing, having a party on taxpayers' money, foreign money, and future earnings from children and grandchildren. That's what the current generation of America is doing. Not all of America, because most of America is doing it really tough with higher cost of living, etc. The wealthy are doing really well out of future generations at the moment by just printing money and borrowing. But if you were China or several other countries around the world, you'd be scratching your head going, you know what? The US could actually be motivated to reduce its debt level by seizing our treasuries as a result of some kind of conflict with us over Taiwan. Why would you keep holding those treasuries? You're going to sell out. And we know China's been selling out, but I'd suggest to you it could be an ongoing big picture sellout. And many other countries in the world, particularly the BRICS-aligned countries. And remember, it's something like 85% of the world's population is neutral on the Ukraine war. And we don't often realize that in the West, but that is quite true. If this ongoing sell down of treasuries, I think it's going to be ongoing. I added to my shorts actually in New York last night, your time. This is going to create a lot of pain for the US over the long term, but because rates are going to go higher, it's also going to mean that the US dollar is going to try to be supported by yield and geopolitical risks, but at the same time, it's starting to feel a little bit like Rome. So that's why I'm at C on the US dollar. But I do think you can still make a lot of money selling US Treasuries, and that is really going to start to bite on US corporations now remember, with the US economy, the aggregate numbers look better than the reality on the ground for majority of Americans, because the wealthy are getting wealthier and they're spending big, and that's hiding, and inflation is hiding too, because in real terms, retail sales are down in the US. If you didn't have the excess spending since COVID by the government, at various government levels in the US, so if you didn't have the increase in spending we've seen since after COVID, let alone during COVID, the US economy would be contracting at about 5% now. It really is a printing of money growth story for the US that the top end of town has done very well out of. But if the long end of interest rates keep going higher, and it doesn't matter what the central bank, what the Federal Reserve does at the long end, it just doesn't matter, because the rest of the world, maybe the majority of countries in the world, are refixing their foreign exchange portfolios, their currency portfolios, away from the US dollar to a broader range of currencies, and they're buying gold, so they're getting rid of their US dollars, buying gold. The US dollar could be in trouble, but it also means the US stock market, those US corporations, and that US economy has an accelerating ugliness to it that could eventually really hit home even at the high end of town. So, I mean, I'm a seller of US stocks. NVIDIA is a different story. Maybe some AIs are a different story, but for how long? If the domestic economy is in such pain as it is, the aggregate numbers are hiding how much pain the majority of Americans are feeling, which is why you have this contrast, this almost dialectic between what the administration is saying about the US economy, and they have to educate voters, because voters don't understand the economy is really strong. They're actually saying that. And by the way, Biden may not even run for president. He may be replaced by the Democrats at the last moment. But there's this dialectic between what the administration is saying and what most Americans are feeling. And it's because the economic aggregate data looks good because the wealthy are spending big and having a good time. while the majority are downtrodden and retail sales for them are collapsing, and their quality of life, etc., is collapsing. This is something that is not sustainable. And the United States is looking a bit Romish, right? It just really is. All right, so how do we make money out of all this if I'm right about even half of what I've said? Well, I think the US stock market at some point is just going to start falling on no news. So there'll be no real catalyst for the stock market to be falling, but it'll begin to fall. And when it does that, I called a 1 to 2 year correction 3 years ago, and I was right. Market fell 20%. This could be the 3 to 5 year correction where the market falls 30%, 35%. I could be wrong. I stayed bearish when I shouldn't have over the last 6 months. But I did get that down move, and I have been right on the Russell 2000 index. It hasn't made new highs. So the broad US market, the majority of the Australian people, of the American people, United States people, to Mexico, the majority are, and Canada, the majority are of small businesses have confidence levels of a depression. The consumer generally has confidence levels of a depression because that's consumer confidence data is about individuals, how they're feeling, a large, wide range. It's not about overall spending. That's why retail sales look so different to consumer confidence. It's because the wealthy are spending, but the majority are in real pain. I'm a seller of US stocks. I'm a seller of US Treasuries. I'm looking for the US dollar to eventually capitulate, but there's those other forces. The Australian stock market, Australia is getting itself into a long-term, think in hundreds and hundreds of years, thousands of years. There's rarely been a country that has seemingly wanted to militarily confront its biggest trading partner when its biggest trading partner had previously really been a friend to Australia. And I understand the geopolitics of our chip on our shoulder about being white. We think we're still white in Australia. I think I'm Australian, therefore I'm Asian. But anyway, we've still got this chip on our shoulder, and we have to be aligned with the UK and the US. I think Australia needs to wake up, still maintain those relationships very favorably, but recognize geographically we're Asian. So let's get real about who we are and where we live. But anyway, I've gone on a lot. Go to my website. I've got new products, actually, that will help people on a day-to-day basis. And you'll be able to access and utilize this new information I'm beginning today in Australia, PropX24, and also, just look at my website, cliffordbennett.com.au. Look at PropX24.com. And other possibilities there. And let's try and have a really good rest of this year. I've just had a really personal rave rant. Thank you very much for putting up with me if you're still here. Take care. Have a good day. Thank you.